8:43, we're back. Time to talk finances, mortgages to be specific. Senior mortgage broker Feisal Panjwani here on the BT Couch. Thanks for coming on.
Thanks for having me.
I can only imagine how many calls you've received, and we have a list of questions when it comes to mortgage rates. But the Trump effect, what has happened in the markets and why have they impacted the mortgage rates?
So it's been interesting times, and basically since the U.S. election, what we've basically seen is that things have changed in the way that with all the infrastructure spending that Trump is planning on doing, he's planning on spending billions of dollars, and what's happened there is that there's now fear of inflation. As a result, there's been a massive sell-off in the bond market. And when I say massive, I'm talking to the tune of $1 trillion in the value of bonds has pretty well disappeared in just under 2 weeks. Now, why that's important is that the bond market is where lenders go to obtain funding for mortgages. And when people start selling bonds like they have right now, the price of those bonds drops. And at the same time, the yield or the rate, let's say, on those bonds increases, so it's more expensive for those lenders to source that type of funding. So what do? They have to pass that on to the consumer in the form of higher mortgage interest rates. And we saw that last week, where fixed rates with two of the big banks, Royal Bank and TD, were increased by 0.1 to 0.35 of a percentage point. So that's what we saw last week. Keep in mind that variable rates were not affected. Variable rates are based on the Bank of Canada, and prime rates, there was no change there. The only change that we've really seen in the form of variable rates recently is prior to the U.S. election, TD Canada Trust bumped their internal mortgage prime rate by 0.15%, which is very small. Otherwise, anyone with a variable has not been affected. The only thing we've seen changes on is fixed long-term rates. So
what is your advice twofold? If we're looking at someone, I currently have a variable mortgage rate. Okay. What is your advice for someone currently in a mortgage? They have the variable and they're wondering what's going to happen here. Okay. Will the variable soon bump up higher past the fixed rate? What's the best play here? Okay,
so we've been getting many calls, like probably 30 or 40 of these calls a day, because we've got thousands of clients of ours on variables. First thing I would say, don't panic. We're not talking huge increases. Like 0.25% of an increase on a fixed mortgage rate equates to about $40 a month on a $300,000 mortgage. Secondly, you need to ask yourself, when you took on that variable rate mortgage, was it a long-term plan? Our studies have shown that more than 70% of the time, someone on a variable will fare better than someone on a fixed rate. So if it's a long-term plan, stick with it. In fact, what's interesting is that many economists are expecting variable rates in Canada not only to stay stable, but to actually drop over the next 12 months. So keep that in mind as well. So if you're on a variable and you're comfortable with it, there's absolutely nothing wrong with sticking with the course and staying on the floating variable. Okay, so I can breathe easy. Absolutely. With the advice you're giving. Now, let's say we have a potential home buyer that is about to get into a mortgage. Okay. What's the, I guess, best questions to ask and what to consider, variable or fixed, if you don't have the mortgage? Okay, well, if you're looking at a fixed versus variable, it depends on each individual's personal situation, okay? And it also depends on their tolerance or sensitivity towards risk. So someone who has lots of income based on the amount of debt they have, they've had a few mortgages in the past, they've got lots of equity, they're probably a great candidate for a variable rate mortgage because that $40 a month increase is not going to affect them really. But someone who's new to home ownership, obviously first-time buyers, they want to play it safe. They're putting in a small down payment likely. They want to play it safe. They want to breathe easy, lock it in, and forget about it for a full 5-year period. Major financial milestones in terms of what is happening politically. We know the inauguration will be early January 2017. But if we are to watch the market and anticipate what could happen, what are some key dates to watch out for in the next year? Well, with regards to mortgage interest rates, it all depends on what happens in the bond market. Things may stabilize pretty quickly. I wouldn't be surprised if we saw things stabilize probably within the next couple of weeks even. When we see rates move and bond yields move, normally they move slowly. This time they moved much quicker than we expected. But again, things could settle down and the bond yields you could actually drop, which could bring those long-term rates down again. It's just a matter of time. It's sort of difficult to tell how quickly we're going to notice any changes. So that's why we have to bring you on next month to debrief month by month what is happening with the markets. Great advice, Feisal. Thank you. Thanks so much for coming back on. We'll put his information on our Facebook page, and there you can see, follow along on social media, some great resources to help get the finances in check.